yesterday's trading session. Consumer goods, we did see PZ Cussons, Dangote Sugar pulling back that counter. We'd see industrial goods, big drop for Dangote Cement there that pulled that counter down, despite the gains in Lafarge. Now, insurance, we see AXA Mansard was up, Universal Insurance, Coronation Insurance was also up there, and oil and gas, we didn't see that pullback in Eterna. Eterna Oil was at 0% buy yesterday, and that also knocked out the gains we had in O&O. Now let's look at the top trades and see who led the chart. Sterling Bank led that chart, 65.95 million units traded yesterday, and I think the share price is about over 3 naira now. That's a big one for that stock price. And Transcore also following closely. A lot of buy interest in Transcore yesterday. Unity Bank also up in yesterday's trading transaction. Now we're going to bring in Ambrose Omodion, is the Chief Research Officer, Invest Data Consultant. Gave us, the current market conditions, if we're still bullish, if we're bearish, and how far the market is going to go with this rebound we just had. Good morning, Ambrose. It's good to have you on the program.
Thanks for having me again, Ini.
Ambrose, we did see that positive, market sentiment yesterday, bullish return, a rebound for the market, which is a great start for the week because, investors, we did see that pullback phase in the market, even though we're on a bullish run. How would you say investor sentiment? How would you grade investor sentiment in the market at the moment?
Actually, like what you just said, as at last week, the pullback, is expected, across the, different level of the market, even good with investors, because in any market of the world, we don't expect the market to remain an uptrend. They expect to be a pullback for price correction to create opportunity for new entrants to come into the market. And also, the situation that since the new government came on board, we have seen straight positive 7 weeks of market gain. For me, seeing a mixed trade last week, 2 days up and 3 days down because of profit taking was not surprised, and so it's expected. The good thing is that, yes, as we speak now, that created opportunity for investors to take advantage of that pullback, which we saw yesterday in form of rebound. And this rebound also is not just artificial. I will tell you, this rebound is also supported by some from data and also investors are positioning ahead of what more earnings to hit the market. We saw the two number that came from UCAP and Infinity Trust Mortgage, and also from Gerebu. These are the numbers that came for Q2 half-year results, and they look a bit okay. Apart from Gerebu that we saw in this number, for UCAP and Infinity Trust Mortgage Bank, we saw impressive number coming from them. These are giving an investor an insight what they should expect from the financial service provider in the industry or sector. I believe that on the strength of this, we saw what happened yesterday that the banking encounter or banking index gained about 7.4% for just a day. It tells you that people are taking advantage of what these debtors, knowing that the inflation that just released yesterday, we saw that about 22.79 for the month of June, which I believe that forecast before now from economists and analysts that we're expect to see 30% and above. But with the data we saw, it was below it, which is also a good thing. But another thing that is very, very important that because we know that this is in everyone in every asset class want to hedge against inflation, the equity market looks, like a very important place or an attractive area to be. Because once you want to convert what you have to cash, it's better you bid what equity. If you go into real estate here, which is another way of hedging inflation, I mean, you are thinking long, unless you are going to equity, real estate back equity on the exchange again. Not going to land for renting. But you are going to real estate back equity on the exchange like UPDC and all that, that also help you to take advantage of what is happening in the real estate sector. But I believe that market is coming back with a good positive sentiment. Like yesterday, we saw 60% buy position and 40% sell position. Then there was seeing more buyer gather come back to the market on the expectation of the expected earnings to give a clear direction. And also, if the list of the ministerial appointment from government also made available, now we're already seeing the inflation figure for the month of June. All eyes are still on board on the MPC meeting. But I believe that from what we're seeing in the economy today, hitting up the environment, another increase in the rate will be another danger for the economy. The MPC team also have to think wise about the future of the economy. But I tell you that for now, factors are putting pressure on prices. That means it again will be kind of a catastrophe for me. That means we need to or what we need to change to see what will play out going to the next 4 months or 2 months.
Okay, so what's your outlook for the week, especially with inflation numbers that came out yesterday? How much of this inflation do you think the market is pricing in, taking into consideration that the MBS says that it did not fully capture the FX unification and the fuel subsidy removal? How do you see markets reacting to this very quickly?
Let's quickly look at what not capturing the real data from fuel research. For me, it does mean that our regulators, or what we call those that propose statistics for us, they need to also sit up so that you mislead what investors. We saw the same thing happening on Nigeria Stock Exchange on the 12th of July. Today, to have not seen real data on the exchange, even end of the week. Also, we're seeing another agent responsible for giving us data to invest. We're seeing that they are just giving us half information. But for me, now that we know that they did capture it, let's expect that in the month of July, full capture will be done, and then also give us more insight. That means we're likely to have above 30% that people are envisaging or have forecasted before now. If really they didn't capture the petroleum subsidy removal, let's say that in the month of July, that more likely to. And not for me, going back to how to hedge against inflation, it's a good of the sector. I believe that for investors as we speak now, if you look at what is happening in the physical market, even with all the bonds that were released, they are telling you the yield is about 16%. And also, if you look at the inflation rate already, even though they've not captured the oil subsidy, we're seeing already 22.79. That means you are still in the negative return. That means equity space look better for me for you to hedge against inflation now, because we're seeing some stuff in the last 2 weeks, 4 weeks before the profit taking, even not 50%, 40% ahead of inflation. We're likely to go back to that space again and make money.
Okay, so equity is the best bet to hedge against inflation now because of the negative return we're still seeing in the fixed income space.
Exactly.
Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for sharing your perspective.